going to record today's session so that anyone who misses it, or if anybody else is interested, they can come back and view it at a later time. So I will start off. My name is Pat Monticelli, and I am the Director of Events and Marketing for the Broomfield Chamber of Commerce. And I want to thank everybody for being here today for our first Hype Lunch and Learn of a virtual variety, at least, and maybe our first Lunch and Learn in a year or so. So we're excited to have a new Hype group working with the Chamber, a new group of Hype committee members that have really come in and energized this group. Ashley and Lindsay, I'm looking at you directly. Some new blood in the Hype group that is really making a big difference for us here at the Chamber. Hype is our Helping Young Professionals Evolve organization, our Young Professionals group, and we're looking forward to some great things moving forward. I do want to say thank you before we get started in earnest today to the Broomfield Enterprise. The Broomfield Enterprise is our Chamber of Commerce webinar partner. They managed to they were happy to jump in and help us purchase parts of the Zoom platform that we couldn't do on our own, and give us a little more capability to do things on Zoom, especially during a time when we all don't know when we're going to be able to meet in person. Sometimes it feels like it changes month to month or week to week, so it's nice to have this option. So thank you to the enterprise for that. And I know we want to get started with our going around and introducing each other and learning a little bit more about Hype and about each other. So I think I'm going to hand it off to Lindsay to take care of that.
Hi, everyone. I'm Lindsay Cumberland. I'm a Hype co-chair, and I'm also an insurance agent with Farmers Insurance, the Johnson agency. So what we're trying to do with Hype is just get more young professionals a little bit more involved, or provide the space for more networking activities that people kind of had fall off within the last year with COVID. Right now, we're going to do everything on Zoom until we're allowed to meet in person again, or at least outdoors, weather permitting. We have a couple upcoming events that I just wanted to get on everybody's radar. Tell your friends, or if you have other people that might be interested in either being a speaker or sponsor, definitely reach out to myself, Pat, or Ashley. Our contact information can be sent out to you after, I assume, Pat. Would that work?
Yeah.
Okay. All right. So upcoming, obviously, we have the Lunch and Learn today. Our next one is going to be Tuesday, March 9th from noon to 1. And then we have a Hype Happy Hour coming up next Tuesday, February 9th from 4:30 to 5:30. And then April from 4:30 to 5:30. We're hoping by April, maybe we can get outside and find a cool local brewery or something where we can mingle and interact a little bit more. Hype is
Lindsay,
looking for
if I can interrupt you for just 1 second, I just want to make sure. I was remiss in one thing, but it's appropriate here. You can also reach out to Sam Taylor. Sam, wave your hand. Sam is the CEO of the Chamber of Commerce and the Hype liaison for the Chamber, but the Chamber consists of two people. So Sam and I do a lot of things. We trade off things quite a bit. So you can reach out to either one of us at the Chamber, as well as Ashley and Lindsay.
Yeah, thank you. I don't want to say I always forget about Sam, but I'm just like, we always go to you like, hey, this person wants our help. What do we do, Pat?
And so, that's fine with me.
but I did want to thank also the community members and everybody that participated in our Hype holiday party that we had. It actually went off splendidly. So that was fun. Hopefully we can do something a little bit more this year. But if you're interested in volunteering, being on a committee position within Hype, please let us know. I think right now would probably be a good time to kind of start the networking portion and just to go around, introduce ourselves and who you're with. Again, I'm Lindsay Cumberland with Farmers Insurance, the Johnson agency. We like to make sure you're protected and not just insured. Ashley, do you want to go next?
Sure, I can go next. So I'm Ashley Garcia. I'm the business development specialist in the Denver Metro region for Blue Federal Credit Union. I essentially do a ton of networking and create business partnerships with nonprofits in the area to extend our credit union benefits, as well as some other great partnership benefits. I think our main goal is really around financial literacy and educating our community around financial wellness. It is a huge passion of mine, and also just a really big part of our culture here at Blue. And we just love to get to know everybody and get involved in our communities. So just kind of going down the question line here, I'm pretty new to HYPE. I joined the HYPE committee probably back in October, shortly before we planned the Ugly Sweater Party really quick. Really glad that we had such a good turnout with how quickly we planned, but have a great group to work with. So I'm really excited to see what this organization and together what we can do this year to provide that professional development. One of the things I'm really excited about that our committee has been working on is a mentorship program in which we have those seasoned professionals, we're not going to say old, but those seasoned professionals in their career paths that we want to connect our young professionals to. So that is something I'm really excited about. So if you have or know anybody that is a young professional looking to join, definitely send them our way. These are free right now, so it's a great opportunity to get involved and see if it's something that you want to really get more connected in the future. And we're also looking for those, again, seasoned mentors in those careers out there to potentially be mentors for our young professionals. So more to come on that as we continue to build this new HYPE for 2021. One of the things I'm most looking forward to doing once we get back to normal is going to concerts. I love live music and cannot wait to get back up to Red Rocks this season. And some other topics I might be interested in learning about at upcoming Lunch and Learns is about insurance and hail. What kind of protections we need. So I know Lindsay is going to probably be doing something like that for us here in the future. So I'll go ahead and pass it off to Crystal if you're ready to go, Crystal.
Hi, my name is Crystal Chin, and I am a Rodan & Field skincare consultant. I got my little ones here. It's right in the middle of lunchtime. So was there a list of questions we had to answer?
There's just a couple. Can you see our screen, Crystal? Probably.
Oh, okay, sorry, I just swiped left. Okay. So I am a skincare consultant and I'm with Rodan & Fields. So if those of you aren't familiar with it, Rodan & Fields is the #1 anti-aging skincare brand in North America. It's created by the same two doctors that created Proactive, except now we have a premium skincare line for adult acne and teen acne, as well as anti-aging, sensitive skin, and sun damage. I don't even know if I'm new to HYPE. I've been part of the chamber for 2 years, but I am part of the Wednesday Leads group. And then since COVID happened and I have well, she's not newborn anymore, but she's under a year. We're just really cautious about COVID. And my 5-year-old gets cerebral seizures. So we're in the long haul as far as quarantining. So we're doing homeschooling and all of that. Give me 1 second. And so I don't think I ever had an opportunity to really participate with HYPE just because I had my hands full with everything else. But I did see on the newsletter that you guys are offering a bunch of online things. And right now that's all I can do is participate online. So I was very grateful for that. So I signed up for like everything. Unfortunately, I'm not able to volunteer right now, but I am very passionate about giving back and volunteering for organizations. I just got my hands really full with some other organizations and a couple of businesses as well. But I love what you guys are doing and grateful for all of these opportunities to connect and network during this time. I am looking forward to traveling like everywhere possible when this is over. I'm from Hawaii originally, so I'm dying to go to the beach. And as far as other topics, I would be interested in hearing more and learning about social media marketing for business owners.
Awesome. Thank you so much, Crystal. I'm curious, what island are you from?
Oahu.
Oahu? Okay. That's awesome. My dad actually just moved, him and his wife, to Hawaii a couple weeks ago to the Big Island in Kona. And so I'm just like, cannot wait to go visit them.
is moving to Kona or Big Island right now.
That's what he said. It sounds like it's
affordable. Yeah, it's affordable, and Kona is actually a really nice place. They're actually have a lot of new builds out there. I used to work out there. I worked for Kaiser like 6 years ago, and I would fly out to Kona and work at the facility there. So it's a really it's small, but yeah, if that's what they're looking for, it's great.
Yeah, they were originally living in Christiansted and St. Croix in the Caribbean. So
Oh
this is,
wow! Oh, they're lucky.
yeah, so lucky, and I'm lucky I get to place to visit. But yeah, they were looking for more of a lifelong home, and so I think Hawaii might be that for them. We'll see.
That's awesome. Where I'm from in Oahu, it's I loved it growing up, but it's turned into like mini LA. So it's not that great anymore for me. I love to visit, but living there is different.
Yeah, bigger city, I'm sure. Well, thank you for sharing.
Yeah, thank you guys.
All right, Chandler, I think you're up.
Hi, everyone. I'm Chandler. I'm with Blue Federal Credit Union, and my actual title is Community Engagement and Development Lead. That is basically a public relations title. I am responsible mainly for the Colorado market and community giving. So any nonprofits that we partner with as the credit union or the Blue Foundation, I help head up in the Colorado markets. We have 7 communities that we support down there. I work out of both my home city of Fort Collins, but also in Cheyenne where we're headquartered. I am new to Hype. I heard about it because of Ashley Garcia, and I just wanted to learn a little bit more. And I'm learning to connect with other young professionals in the area that I both live and work in. The thing that I'm most looking forward to doing once we all get back to normal is burning my masks. I have no need for them. I do not want them. And I think they would make a awesome fire starter. So that's what I'm most looking forward to. What are some other topics I would be interested in? I would love to hear some talk on like extreme financial stuff, like the FIRE movement, which is financially independent, retire early, or paying off the snowballing debt, that kind of stuff. So kind of like the fringe side of finances would be awesome for me. I think that is something that's kind of hot in terms of what people are paying attention to. It's kind of a new and exciting thing that other people have heard of, but I would love to learn a little bit more about that and if it's actually achievable or if it's all just a pipe dream. So that's kind of a little bit about me. Yeah, just excited to connect with everybody and see what we're all about today.
Thanks, Chandler. All right. Well, since we have a smaller group today, again, we're really hoping to build this group. This is our first one, so we're really trying to get the word out at the beginning of the year. So tell your friends, tell your neighbors. We want more people interested in this, and we also really want to get some really great professional development out of it. So I will be presenting our first seminar today. Did you have a question, Chris?
Sorry, yes, real quick about inviting people. Do they need to be Broomfield Chamber members?
No, so I was gonna just interject right now and let everybody know for Hype, you don't have to be a Broomfield Chamber member. Any event you attend, bring a friend. Like, spread the word. And then also with that, if you know somebody that's a member, but they have like a younger kind of demographic that works there, they don't have to be like the show up chamber person or like the BDR or your SDR or anything like that. If somebody's a chamber member, it includes all of their employees. So anybody is able to come and hang out. So I think that's kind of a misconception sometimes with chambers is like for me at my work, sometimes I'm the only chamber person that shows up, but technically anybody in the office could come. So if you know somebody, no matter where they're at in their career, we're just trying to provide more either networking abilities or professional development to help them grow into the positions they want to in their career. So any point in their life or time, send them our way.
Awesome. Thank you so much, Lindsay. All right. Well, Blue is our presenting sponsor today. So we are going to do a seminar on understanding and building your credit score. So I'm just going to go ahead and pop into that seminars.
Ashley, I hope you don't mind. I'm gonna be turning my screen off just because I gotta put baby to bed, but I'm listening. But I don't want to be. Okay.
Okay. Stop sharing. All right. There we go. Okay, I'm just gonna move you guys to the side here so I can know what I'm talking about. All right, so understanding and building your credit score. Credit scores I have always found to be a little bit of a mystery, and I know that a lot of people really struggle with their credit score if they're not familiar with how to build or really what all the numbers mean. So what is a credit score? So a credit score is that number that ranges between 300 to about 850 that really depicts the consumer's credit worthiness. Your score is based on credit history, such as your number of opened credit accounts, your total amount of debt, and your repayment history. Those are really the top three that build your credit score. So lenders typically use scores to evaluate the probability that that individual will repay that loan in a timely manner. The higher the score, the more likely that you will be approved for that loan. And the score also determines the interest rate for repayment. So how does a credit score work? So the credit score model was created by the Fair Isaac Corporation, also known as FICO, and is the most commonly used by financial institutions. So this is the one you've probably heard of, but every creditor really defines its own ranges to determine what is considered a good score. But the average FICO score range is often used, and it's a very good baseline for you to kind of determine in what shape your credit is in. So we really consider that 800 or higher excellent. Very good credit is really between that 740 to 799 range. Good credit is going to be that 670 to about 739, fair 580 to 669. And what you'll notice in that fair, that's when you're looking at things on the credit report that are really pulling that score down, or things like collections and such on there, really high debt ratios. And then poor is going to be really anything under that 579 mark. But I would say what your goal would be with a credit score is to really shoot for that good or higher. That's going to get you the best interest rates on loans, and also just really helps you be able to get approved for certain kinds of loans when you're in need. So credit score factors, this is really how your credit score is calculated. And this is a huge part because a lot of the questions that we get from our members are, how do I increase that score? And the one crazy thing is it can take 5 minutes to tank your score, but it will take years to rebuild. So it's always best to know the ins and outs of the best way to build and to prepare your credit score for future planning, because it is more of a tedious thing to build credit than it is to ruin it. So 3 major credit reporting agencies in the United States are Experian, Equifax, and TransUnion. So these are the 3 companies that typically will report credit. They all have their own websites, and typically what you'll find is if you're pulling your score from either of those websites, they will differ. And that's really basically just because it depends on who that person that's reporting. Let's say it's US Bank that's reporting something. It depends on who they're reporting to. Some people don't report to all 3 bureaus. So there can be differences in that information, but the 5 main factors that are evaluated when calculating those credit scores through those agencies is payment history, total amount of debt owed, length of the credit history, types of credit, and the new credit that you've obtained. So those are the factors that they are reviewing when they are determining your score. So this has a lot of information on it, so I'm going to go kind of slow through this. But this little section here is going to show you really how each one of those things is broken down and what is going to affect your score on the greatest level. So 30% of your credit score is the debt that you owe. So if you owe $3,000 on your credit card and $15,000 for your car, and that's all the debt you have, 30% is going to be based on just those two things. The fact that you owe $18,000. So it's that collective amount of debt owed. 35% of that is payment history. So a lot of people don't realize that if you make one late payment, that can really dramatically drop your score. So even if you're really struggling to pay your bills, we always recommend at least make your minimum payment to keep your credit in good shape. 10% is based on any new credit lines that you've opened. New would be considered within the last 2 years. That's really what is based that new credit. So if you are going into the mall and try to open a retail card at every retailer in the mall, that's all going to be considered new credit, and it will also kind of tank your score. And we'll get to that a little bit later on the why behind that. 15% is the length of credit history. So how long you've had that line open. So for example, I opened my first line of credit when I was 18. It was an overdraft on a checking account with a bank. And that is my longest line of history. So if that was really terrible history and I had made late payments all the time, it's probably hurting my credit more than it's helping it. So we really look to see length, but also the quality. So if you were to close that overdraft or whatever the line of credit is that has been your longest, but maybe has not been your greatest history, it is no longer there. So if it's really great for you, we always recommend keeping open those lines of credit that you've had for a long time, because if you were to close that line, you're going to lose all of that really great history too. And then 10% is just kind of the mix of all of it. Of all the different kinds of credit that you have on there, whether it be maybe a home loan, auto loan, credit cards, anything that's open-ended or closed-ended loans. So maybe like a personal loan or something like that. So that type of mixture it's all calculated together. So making a payment 30 days or later really can drop your score significantly. I would say on average, you're looking at around 30 points. And again, these are very maybe about a little bit kind of answers. Unfortunately, there isn't a solid mathematical way to figure out exactly what that score is going to be, especially because each bureau is reporting a little bit differently. So don't make late payments. That is one of the biggest things that can get your credit score to tank. The total amounts owed, total amount of debt owed accounts for 30%. So this is really that percentage of credit available to a person, which is known as credit utilization. So that's what I wanted to talk to you about next. So we're going to look down here at an example of credit utilization. So let's say you have 3 credit cards. And credit utilization is going to be those open lines of credit where you can use it and you can pay it down. So let's say on card 1, your credit line is $5,000 and you have a balance of $1,000. On card 2, your line is $10,000, but you have a balance of $2,500. And then you on card 3 have a line of $8,000 and a balance of $4,000. So your total revolving credit across the 3 cards is that like what you can spend. So the 5,000 plus 10,000 plus 8,000. And these are pretty high numbers. I would say I definitely don't have 3 cards with this high of a limit on there, but just to give you an idea. So that's $23,000 in available credit. But the total credit used is what you're actually spending on those. So that's going to be $7,500. Therefore, your credit utilization ratio is the $7,500 divided by the total amount that you can spend. So that'd be about 32%. How does credit utilization impact you and why is this important? It's really important because as you pay things down, it usually takes up to about 3 credit statement cycles for it to actually show that your utilization is coming down, which will actually increase your score. So the lower utilization percentage, that will help build your score. So again, as I mentioned earlier, closing a credit card account may hurt your score by reducing your total available credit. And it can also negatively impact your credit history because of that. So again, if we closed that $10,000 card, that's going to take our available credit down to $13,000, and it will jump that percentage from 32 way, way higher. So that's what we're looking at with credit utilization. So across all of your credit cards, it's generally a really good idea to not be spending any more than 30% collectively with all of your available credit. Of course, you never really want to revolve balances on credit cards anyway. It's not the smartest way to pay debt down. But keeping your credit utilization, if you do have to revolve balances on credit cards, 30% or under is a really good goal. Do you have any questions so far, anybody, as I'm moving through? Okay. All right. So again, the length of credit history accounts for 15%. So with a longer credit history, lenders have more data to determine your repayment history, and this is why it's very important. So the earlier you can start, especially with kiddos or when people are turning 18, to start credit off early is super important, and to ensure that you're making those payments on time and being smart with your credit. Again, the education piece is huge. And so that's what we're out there trying to do, is inform people about how to start off right versus trying to fix it later. So the types of credit in the credit mix, that accounts for that 10%, and it shows a person what they have as far as a mix of credit. So installment credit, such as a car or mortgage loans, then the revolving credit, such as credit cards. And then the new credit accounts for 10%, which factors in how many new accounts a person has opened or applied for recently, which results in credit inquiries. And it also shows on there when the most recent account was opened. So inquiries are another thing that can ding your credit. If you were to, again, walk into the mall and start applying for all different kinds of credit cards, each one of those inquiries is going to show up on your credit report. And let's say you're trying to apply for a home loan at the same time. Well, when they pull that credit and they see, oh, Victoria's Secret, PacSun, this retailer, Target, all of these different inquiries, people kind of wonder why we are trying to open so many lines of credit. So it's just not great to have a lot of inquiries on there. I would suggest only have your credit pulled when you're looking for a loan or potentially trying to refinance a loan for a better rate. Do some rate shopping around before you just walk in somewhere and have them pull your credit, because those inquiries do add up and it will affect your score negatively. So a credit inquiry is a request by an institution for the credit report information from that reporting agency. So they can be from all types of entities for various reasons, but are typically made by financial institutions. And they are classified as either a hard pull or a soft pull. So what a hard pull is, these ones are the ones that are requested from the Bureau anytime a borrower completes a new credit application. So you walk into Target, you apply for their card, that's a hard inquiry. Walk into Blue Federal Credit Union, apply for an auto loan, that's a hard inquiry. This report also includes the borrower's score as well as a detailed credit history. So this will show everything that your name is on and has been on since you began your credit journey. Most lenders only pull from one bureau, so scores may vary depending on what bureau the lender uses. So for example, one credit union may only pull TransUnion. So that's always a really good question to ask, is what bureau do you pull from? And then you won't be so surprised when maybe your score is a little lower because they pulled from a different bureau than you have done some research on. Hard inquiries can be harmful to your credit score. And this is because, again, it shows that you're looking to get more credit. So the more you're doing it, the more it's going to drop your score. About 5 points on average is pretty typical. But if let's say you're shopping around for a vehicle and you are going to different dealerships, all within maybe like a 2-week period, that's when a borrower or a lender is going to see, oh, you're clearly shopping for a vehicle and the best rate possible. So there are definitely some loopholes throughout those inquiries where they aren't going to ding you as bad. And that is one of those circumstances. A high amount of inquiries in a short period of time can just be interpreted as a high-risk borrower and may really just affect that approval status if you're applying for a different type of loan with a financial institution. So in certain cases, for example, you're shopping for a vehicle, we did that already. I already talked about that, so I don't even need to talk about that on the end of the slide. So we'll go into soft inquiries now. So soft inquiries are not going to affect your credit score like a hard inquiry can. And they can be requested for a variety of reasons. So when an individual requests a copy of their own credit report, so you can actually go to Equifax's website and request your credit report there. That's going to be a soft pull because you're not actually going to get a score. You have to pay for your score on those websites. I think mine was like maybe $25 to get my actual score. But it was helpful for me just to get a good gauge when I was preparing to really build my credit and see where I stood. But you can also get a free copy once a year. And I think I have a slide on that, but that won't give you a score. It's just a great way to track and see all of the things that your name is applied to on credit, to check for fraud and to see really what your history is like. So some other opportunities when a soft pull is used is when you give a potential employer or landlord permission to check your credit. They are not going to do a hard pull. They're just going to really look at that history and see what kind of person you are according to your credit score. You can really tell a lot about a person and their spending habits based on their credit report. So that's a lot of times what people are looking for. When a financial institution you already have has a relationship with you, checks your credit. So for example, if you have, well, I have a Blue credit card. They did some soft pulls right before the end of the year and did automatic increases for people who qualified. So they checked that soft pull credit within range, and then that's how you find out about an automatic increase. So a lot of times people will, and financial institutions will do those soft pulls and send out mailers for you to open new credit cards. And that is where they're getting that information from. And then when a credit card company wants to send you the pre-approve offer, same thing. I keep talking, over all of the things I'm already saying. So consumers also have the advantage of analyzing any soft pulls with their credit file. So that's, these inquiries can be found under the subheading inquiries that do not affect your credit rating. This portion of your credit report shows the details of all the soft inquiries, including information such as who's requesting that and the inquiry date. So that just gives you a little bit of history on there. If you've never viewed a credit report, they can be kind of confusing. At Blue, we will do credit pull reports for you for free when applying for a loan. We can go really in detail and show you and go through each item on there and help you look to understand what is all on there, because it is a lot of information. So the big question, how to improve your credit score? Paying your bills on time. By far, one of the easiest things that you can do. 6 months of on-time payments is required to see a noticeable difference in your score. So don't make late payments. And if you've had to make late payments, you know, with COVID, we've seen a lot of our members really trying to, you know, people don't have a lot of funds right now, especially if they've lost their job or are struggling somehow. So it's really important to contact your creditors and see if maybe they'll work with you on a payment plan. A lot of different creditors were doing that through these crazy times with COVID for that specific reason, that they didn't want to impact your score. Even I think Excel was doing some sort of like payment plan and not reporting if you were behind on late payments to creditors and that sort of thing. So paying your bills on time is huge. Again, they typically report to credit after 30 days of lateness, but it's always really, really a good idea to check and see when they will report to credit. Find credit cards and loans with low interest rates. Retail credit cards typically have rates over 20%, which can be difficult to manage and pay off. I am a huge advocate for don't get retail cards unless you intend to never carry a balance on there, and just use them for their rewards, but do so very carefully. I used to work in retail and sold credit cards every day, and it was one of the hardest things I had to do to make our goals there and ruin people's credit lives. So really try to stay away from retail cards if you intend to revolve a balance. Only utilizing that 30% or less of your available revolving credit. So don't spend money that you don't have. Up your credit line. So if you have a credit card account, call and inquire about a credit increase. If they're not doing like an automatic approval to increase that, let's say you have a $500 limit with one of your institutions. After maybe a year of really good history, you can call them and say, hey, you know, what do I need to do to increase this line to $2,000? Increasing your available credit is going to help alleviate any balances that you are revolving and keeps that utilization number down. And not closing a credit card account if you have that good history on there. Depending on the age and credit limit on the card, it really can hurt your score. So it's always really good to talk to a financial specialist about, you know, this is where I'm at. What would you suggest? This is the length of time I've had this card. I know even when you're purchasing a home, sometimes they'll go through your debt to income ratios and kind of pick and choose through which ones they're asking you to close, because you want to fight for those ones that have your best history and longest history of good history, because if you close it, it's gone forever. So just something to think about when you're trying to improve your credit score. All right, and what if you have no credit? There are actually quite a few people out there that have never utilized credit for anything. We have several members coming to us. Actually, I just met one of our members the other day at our Yale location that he used cash for everything. He's in his late 50s, and now his landlord offered for him to purchase the condo from him, but he had no credit to do so. So we've been working with him for the last 6 months to increase his credit score and build a score so he can actually apply to purchase this condo. So it can be a really beneficial tool when you're looking to, you know, achieve your dreams of homeownership or even purchasing a vehicle. So my suggestion would be to find a reliable financial institution that is willing to help you with the process. It can be really confusing. It can be hard and difficult. So having a financial coach to help you with that is really huge. Next, saving. Many financial institutions offer secured credit cards. So for example, if you save that $500, you can walk into Blue, for example, and apply for a secured credit card. We hold that until you apply to have that unsecured, but I would say a year is typically good to build up enough history to have your $500 back. We use it as collateral. So if you were to default and not pay that $500 and max out your card, we have it held in your savings account to pay off for you. So it's just a lower risk way of obtaining credit for new borrowers. Ask about getting an overdraft line of credit on your checking account. That's huge. That's something that many financial institutions do. And it's also way better than paying overdraft fees. So definitely look into a line of credit on your debit or checking account, because that will help you build credit as well and open up some of that revolving availability. You can also be a co-borrower or authorized signer on an account with a reliable borrower, such as a parent or spouse. This one's a little tricky. It can go really, really great. It could also go really poorly. So I've seen both scenarios. You just want to make sure that you trust whoever you're co-borrowing with 110%, because they could really make or break your credit for you. So always keep that in mind when somebody's asking you to be a co-borrower on their loan or vice versa. Only use credit if you have to for the purpose of building your score. Try not to just spend money that you don't have. Think of it, if you can't pay it off every month, then just try to save for those expenses instead. we kind of have this mentality that we want things and we want it right now instead of waiting and saving up for it. But that is really a good habit to get into, is save for it versus pay interest on it. And then never add unreliable individuals to your credit accounts. They really can destroy your credit. So even just a boyfriend or your best friend, it's always best to really work on your credit score yourself if you don't have super reliable co-borrowers or authorized signers to work with. Okay. Also checking your credit regularly. So this is going to have some links provided here where you can get your free credit score. So, or credit report, excuse me. So you can check your credit reports with all 3 bureaus at Experian, TransUnion, and Equifax, and get that free copy of your credit report from each bureau once every 12 months at annualcreditreport.com. And you can also get your score for a fee. And I think the fees are different with all of them. So that's definitely something you'd want to look into. But definitely it's not worth it to sign up for like a monthly membership unless you really want to do that and you have the funds to do that. Things like Credit Karma are great for monitoring your credit to make sure that you don't have any fraud on there. So that's a great tool as well. But if you're really looking to get that score, you can come to Blue, apply for a loan or a credit card, and we can always walk you through that credit process and give you an actual score. I would definitely not rely on Credit Karma or Credit Sesame or any of those for that accurate score. It's really going to be a general idea of a score from those. So I've had members come in really surprised, like, oh, and Credit Karma said I was a 740, and then they come to me and I pull a 680. So it's really not super accurate. So I would say just take it with a grain of salt. Like I said, great for monitoring, but not super great for that super accurate score. And if you need to dispute any information on your credit report, the best and quickest way to do so is online. Remember, disputes need to be made with each credit bureau where the information you're disputing appears. So you would want a copy of each of those reports and making sure that you're contacting each bureau to process that dispute. So we also have the links on here. If you have any issues on your credit report, that's what you would do. And sometimes your financial institution may not be able to provide you with a loan due to your credit score or debt to income ratios. So if you owe over 50% of what you bring in every month, then it's really difficult to get approved for a loan. So in these situations, reaching out to a certified credit counselor for advice is really, really helpful. Some organizations may also be able to offer consolidation options, debt management plans, or even lower credit card rates than you could qualify for through a financial institution. GreenPath is one that I have personally used that was fantastic. It was actually with a different credit union that I heard of GreenPath, and really, really great organization that works with all different credit unions all over the country. They provide debt management plans, consolidation options. And one of the crazy things they were able to do is I was trying to consolidate a lot of high interest credit cards before I learned all of this information. I had rates with 26%, 21%. And what they were able to do is work out a deal where I continued to just make my payments through GreenPath. They had a deal with the creditor. I think one of them was a Capital One, and negotiated interest rate of 9% instead of the 26%. So it just made it more manageable for me to pay that down much quicker. So there are some really great options out there if your financial institution where you may have been a member at a long time can't help you. Smartaboutmoney.org is another one, but these are definitely some options, and do your research on these companies as well. All right, well, that concludes our presentation today. I hope you learned a little bit more about your credit score and how you have an impact on that. So are there any questions or?
Actually, I do have a question for you, Ashley. I think on one of the very last slides, you mentioned that some of the credit agencies, Credit Karma and those sorts, that's kind of a ballpark figure. And I actually ran into that recently. You're looking at scores that I get through Discover Card or through Capital One. Those are all over the map. And was talking with a financial advisor about it, and he was really lamenting the fact that people can get scores from all these different places and never really get an accurate picture of what their score is. What is the best way? Is there a recommendation for the best way for an individual to get the most accurate score possible, or does it really depend on what they're trying to do with that score?
Exactly. It really, really depends on your intent. So if you're looking specifically for an auto loan, many financial institutions will actually pull what's called, I can't remember the specific name for it, but it's a auto loan score that only pulls your auto loan information. And they will look at just that score when they're trying to qualify you. So in that instance, it would be very difficult for you to use Credit Karma or even just pulling off TransUnion, because it's not just consolidating all of your auto loan repayment history. Same thing for buying a house. Sometimes they will use a different method to calculate your score. Or they'll calculate them all together. So really, it just depends on what your goal is and what you're trying to accomplish with that. And then those questions can kind of be answered to help you with that process. But I think as a general idea, for if you're like, hey, I want to know my score with TransUnion, the best way to do that is go right to the source. What you can also do is once you have, like I said, I had paid for my credit score through, I think it was Equifax a couple of years back. I signed up for like their free trial and made sure to cancel it right afterward to get that score. But that was the closest I had ever seen it matching to what Blue pulled for my auto loan. And that was essentially what I was doing, was kind of trying to see what ballpark range I was in for, what I was going to do with my loan, how much down payment I was going to put on there, all that sort of thing. So that really kind of helped me figure out. And it also helped me realize there was about 3 lines of credit that I had on there that I had never been removed off of when I got divorced. So it can be really eye-opening to be like, oh my gosh, like, I'm so glad I noticed that, because then immediately I was on the phone like, get me off of these. I want my name off of them. So yeah, going directly to the bureaus, I would say, is the most accurate when you're looking at scores and averaging those. But again, depending on who is going to be pulling the information over, if you're looking for a loan of some sort, you're going to want to ask them where they're pulling from, and that will give you kind of a better general idea.
Got it. Thank you.
Yeah.
I have a question.
Yes.
So you work for Blue, right?
Yes.
Okay. So I don't know if you can answer this then, but if you can, what is the best credit card as far as benefits and perks available for people who are good with paying off their credit card?
So again, that really depends on what you think is a perk. So some people love getting cash back. Some people love the ability to spend it on airline miles. Some people really just like to have a website where they can kind of shop through and get a new blender. It really just depends on what kind of perks you're interested in. But the key things to look for at any financial institution is the interest rate. If you interest rate, and if it has a monthly fee or annual fee, any fees associated with it. I would say absolutely don't get any rewards card that is going to charge you $40 a year to use. Like, that just doesn't really make sense, because there are definitely lines of credit out there that you can get that we don't charge. So for example, Blue, we have our rewards card where you earn points for every dollar you spend, and you can redeem them for cash, you can redeem them for blenders, airlines, all kinds of stuff. It's a lower interest rate. I think that one begins at maybe a 12%. I'd have to check out where we're at. But that's still lower than going with like a Capital One rewards card where your interest is a 26% no matter what. And the reason I say that is everybody has the great intention of not revolving a balance, but then, COVID comes along and so many people are now having to live off of credit cards that you want to have the ones that not only are helping you in the moment, but will help you in the future. So always compare, again, the fees and the rates and then the perks. Our credit card, I love our credit card because it is a lower interest rate for those perks, and you can redeem for cash. So it's really kind of like a holistic card. But those are the things that I would suggest to check into.
What's your interest rate?
I want to say it starts at like a 12% based on your credit, but I
Are you familiar and allowed to talk about because I've heard a lot of good things about the Chase Sapphire cards, that they have like one of the best perks, but they do have like I forget what the annual fee is, but from friends that I have, they all like comment on how good it is for travel points.
Yeah, and I would say that the ones that are really good with travel, I haven't used ours as far as the rewards with travel. But if travel is like your perk, then I would specifically look into travel rewards cards. Because, at a certain point, it's like, well, you want the maximum benefit that you can possibly get out of that specific card. I know for Blue, kind of one of the additional perks you get with us is the more you bring to us. We have a relationship reward program. So if you had our rewards credit card and we're at our top tier of having all of your business with Blue, it's kind of a point system. You could earn up to 2 points per dollar spent on that card, which you're doubling every time. So in that instance, it may be better than a different card. So again, it really just goes back to what you're trying to get out of it, and ensuring you're okay with, the annual fees and the interest rate if you had to revolve a balance and that sort of thing. The other thing that's really great with our credit card is for those members now, like that may have had that rewards card, it may have been great, but now they're trying to live off of it and it does have that higher interest rate. So if they're revolving balances now, we have the opportunity to swap that card over to, we even have a fixed rate credit card, which is kind of unheard of at most financial institutions. And we're more than willing to work with you on that. So yeah, I used to be a banker with Blue, so a lot of these things are just not fresh up in my head, like interest rates and such, but I can absolutely check into it. So feel free to email me with any of your questions, and we can even just schedule a one-on-one, and I can get you partnered with somebody in a branch that that knows all the actual answers.
Thank you. That's good feedback and information to think about.
Yeah, absolutely. One of the things I will bring up too, I had a new member up in our Granby market. She was religious about using her credit card for rewards because she just put everything on her credit card, paid it off every month. Well, we have a checking account that, again, with the relationship rewards, the more products and services you have with Blue, the more we would try to reward you. So she was looking into our extreme checking account, which you can earn between 1.5% and 3.5% on all balances in your checking account up to $15,000. So I was like, all you have to do is use your debit card at least, 10 times a month, have paperless statements, and a direct deposit or an automatic bill pay come out of there once a month. And she was like, wow, so I could really earn 3.5% on up to $15,000. Like, that was a better benefit. She had done the math than it was for the cash back she was earning. The 3.5% adding up every month just by using her debit card instead of her credit card. She opted for that option, and I want to say she might have had one of those Chase cards because I'm like, I've heard of that recently. I could be totally wrong, but whatever it was, she had done the math on, and that was a better benefit for her, was to just keep it in her checking account and use it that way instead of opting in for the cash back on the perks. She was going to earn more.
Is that new, where they're encouraging those programs to help people? Because I feel like everybody shifted to just using credit and then paying it off because of the perks. So now banks are starting to give you perks for keeping your money in your bank account and using your debit card. Is that right?
Yeah. Yeah.
When did that start? Has it been like,
You know, I honestly had not heard of any other financial institution kind of rewarding members in that way until I came to Blue. I was kind of blown away by our extreme checking account and the ability to earn interest on your own money. And what I do with it, because I'm really bad at being like, oh, my available balance. If I wanted to put all my savings in that checking account, I'm like, I can't have access to that. I'll spend it all day long. So what I have them do is
we're like that too.
yeah, I have them just put a hold on it. So I'm like, okay, I'm going to throw, $5,000 in my checking account, put a hold on it where it doesn't show up in my available balance, but it's there to earn the interest. Then I have all of my interest that's earned monthly just deposited into a separate savings automatically where I never even see it until I look at that specific savings account. So I would say by far one of our biggest things that brings people over is the ability to earn on your own money with Blue and watch it earn instead of being 0.0%.
I'm gonna and put email in the chat. Would you mind? I mean, my husband is the one that handles like the bank stuff, but would you mind reaching out to me and maybe we could chat more?
Yeah, absolutely. I'm gonna stop sharing here really quick so I can actually see you.
Well, Crystal, I can connect you to via, I can send an email to both of you, just connect the two of you.
Oh,
awesome. Great. Thank you.
Well, I actually didn't even see the chat stuff here. Oh, perfect. Okay.
All right.
Guys,
Well, thank you so much, Ashley. That was awesome.
Good. Well, I'm glad it was helpful because I wish that somebody would have done that with me when I was a kid because I had to ruin my credit before it got any better. I once thought my one credit score was really, really great.
All right. Well, we are about at our time. So Ashley and Lindsay, I'll let you all wrap it up.
All right. Well, Crystal, thank you so much for joining us. Chandler, you too.
Thank you guys.
Super excited to kick these off every month. One thing you will notice about the happy hour events is we're really going to be trying to feature a nonprofit or a business as that sponsor, where it's just a little bit different, not so much that professional learning, but more of that like, hey, let's get interested and learn about maybe somewhere we can volunteer or support our community with something like that. So that's kind of be the agenda for those happy hours. And if you guys know of anybody that would be interested, please send them our way. And
are you guys featuring nonprofits that are chamber members or any nonprofit?
We would like to try to keep it with chamber members, obviously give them the opportunity first. Our February one is going to be with the Broomfield North Metro Kiwanis Club, who actually is a new chamber member. I kind of offered to throw them in there because I'm a part of the club and I'm the secretary. So they were looking for ways to really grow, their volunteering and their presence in the community. So essentially that's our goal. And we're all in Broomfield and Boulder County. It's just very all interconnected. So I've had another couple nonprofits be like, oh, I'd be really interested in that. And, that also opens the door to bring on new chamber members. So I would say that we are open to it at this point because we're doing things a little differently. But of course, we always want to encourage chamber membership or at least involvement.
Well, if you guys need a spot, one of the things that I'm part of and connected to for my Asian heritage is I'm the new president of NAP Colorado. We're the National Association of Asian American Professionals. And actually, I should probably reach out to Pat and Sam about what a nonprofit chamber member looks like. I've always served on the board for the past couple years, but this is my first time stepping into this role. So I'm looking for ways to network and grow that. So maybe Sam and Pat, I'll shoot you guys an email later.
That would be great. We recently set up a special rate for nonprofits that have a smaller operating account and maybe no employees to get them the visibility. So
awesome.
It might fit in there. That's how Kiwanis came in because they don't really have any employees.
Yeah.
Okay, great.
Awesome. Well, I'm so excited to have you guys. It was kind of nice to have a smaller group, I think, for our first kickoff, just so we could really get to know each other. And I am so excited that you're able to join us, especially if you are hardcore quarantining. I feel for you.
I have a 2-year-old, so I understand. It's been rough.
Thank you guys for offering these. I appreciate it so much.
Yeah, well, hopefully we'll see you at the next one next month.
A good one,
And
everyone.
I'll definitely reach out to you, Crystal. Thanks so much, guys. Have a great rest of your week.
Bye-bye.
Thanks,
Bye.
everybody.
Thank you.
Thanks, everyone.
Bye-bye.
Bye.